So here's what you need to understand about buying a dip, right? Seeing a dip and immediately start buying blindly, hoping that it goes back up, is not how you buy a dip. What you're supposed to do is have price points, right? And if you have price points, what happens is you can get in at as low as possible, and then once it starts to reverse, you can already be in it. And then what happens is if you buy it at a low and you see it turning a little bit, you can buy it, and then watch this, as it goes up and pulls back again, you buy again. This is how you strategically buy the dip. So one of the things that we heard was, a stat that we had was that investors were buying the dip more this year than ever before. This was during the Liberation Day. During Liberation Day, when the market was going bloody red, we came up here and we had a stat, and the stat said that new investors right now are buying the market more than ever before. And that's when one of the guys came on here and said buying a dip is not a strategy. And immediately when he said that, I said, you are one of the culprits that are responsible for trying to shake us out of position. But we don't believe you, nimwit. I learned that word on TV. I heard one of the dudes call a dude a nimwit. I said, what the hell is that? Never heard it before a day in my life. I looked it up. I said, oh, this political talk. I've never heard that a day in my life in the hood.
I learned it from sitcoms.
That's where I heard it from.
Like
Friends.
TGIF.
Yeah. Nitwit.
Wait, you was watching Friends?
Of course. Seinfeld.
I watched Seinfeld, but Friends?
Come on, man. Everybody watch. Listen to me. Friends was the most watched show ever in the world. Sitcom. Yes.
I have to look it up.
Go look it up. Most watched sitcom ever. Friends. Stop playing. Hall of Fame show.
I think it was a rule that they said they didn't have not one black person on the show.
Probably not, but that's where Living Single came from.
Oh, okay.
That's why he had Living Single. Friends, the dude with the hair, man. Love watching him. He made no sense whatsoever. It's a Hall of Fame show. What'd you say?
No, it definitely is.
Come on. Well, after The Simpsons for sure. My bad. You can't forget about Bart. Bart has been predicting worlds. Bart has been predicting world-changing events since the 90s, bro. Here's things that traders need to understand. As traders, here's 5 things we need to know. So once you understand about buying a dip, the next thing you also need to understand is, here are 5 parts of trading that you need to learn and you need to have locked down that is going to be important. Watch this here. Understanding market structure. I truly believe, now, everybody can say, I'm just giving you traps, 5 things to understand, right? If you understand market structure, you understand what's going on in the market. You understand what the market is showing you. I always say, I only trade the market that's in front of me. I always say that. Y'all know their favorite saying. You gotta do what? If you look left before you move right, you gotta look left before you move right, because looking left gonna show you how to do what? Move right, right? So if you understand market structure, it's identifying where the market is, what's going on, right? Are we creating higher highs? Are we creating lower highs? Are we creating lower lows? Understanding market structure to me is necessary. Then, psychological levels. Reason why that's important for me is because if you can understand whole numbers, those become psychological numbers, because the market is a collection of ones and zeros. That's all the market is. It's a combination of a bunch of ones and a bunch of zeros, right? And so numbers like 50, 100, 150, those become psychological levels. Or understanding, watch this, if you can find an all-time high on the market and then the market soars past it, I can almost promise you that previous all-time high is going to be a psychological level on the market. You can always mark that off. So, understanding your Fibonacci. Why is that important? Because now you understand retracement areas. Where's your swing high? Where's your swing low at? That's going to help you out a lot. Understanding, number 4, understanding your trend line, right? Understanding, is the market in an uptrend, or understanding, is the market in a downtrend? Now, me specifically, I personally only like horizontal lines, but I do understand the importance of understanding these diagonal lines. And lastly, the fifth one is just understanding candlesticks. Now, I'm gonna tell you something. When you try to start interpreting patterns, there's 50,000 patterns that you can learn. I'm gonna tell you this. If you understand these simple patterns, double top, double bottom. If you can get into head and shoulders, inverted head and shoulders. If you can understand a bull flag, bear flag, you don't need to learn too much more. But the reason why is because if you start understanding them, and I'm about to say, then you get into a cup and handle as you get, like if you start understanding them, they happen over and over again. Right? So there's a million things that happen. You can get into three white soldiers, you can get into crow's foot, you can get into piercings, you can get into so many Twizzlers, you can get into so many things, right? But if you can understand that, double top, double bottom, head and shoulders, inverted head and shoulders, bull flag, bear flag. If you can understand them, you get on any chart, you identify, you can make you some money. And then the more you start to identify, the more you start to learn. Learning becomes the new addiction. Because here's the one thing I know about everybody. Once you learn how to make some money, you cannot unlearn it. And making money becomes the sport. And I told somebody this before. I said, why do you think somebody like Elon Musk, whether you like him or don't like him, you know why he can keep making successful businesses? Because he understands the formula of what it takes to make, create, and run a successful business. Now, here's the thing about it. After you become the richest man in the world, the only thing left to do is go to the moon. But you understand how to make, this is why you have investors in the market, they never stop playing the game. This is why Warren Buffett, 90-something years old, and he still loved the game. Once you learn how to make, and this ain't anything, it's in business, it's in real estate, it's in trading, whatever it is, yo. Whatever it is. Once you learn the framework to making money, then you start adding depth. The problem is, y'all be trying to go wide before you go deep. I go deep. Let me learn market structure. Let me learn supply and demand. Let me learn how to use my field. Let me learn what's liquidity sweeps. Let me learn a few candlestick patterns. I don't gotta learn 70,000 indicators. Me personally, I don't gotta have the MACD, the VWAP, the volume, the triple XQ, and all 7 of the SMAs, the EMAs, the shortcut and the teacup and I don't gotta learn. I don't gotta use every indicator that TradingView got. I'm gonna trade the chart that's in front of me and I'm gonna keep it clean as possible. And once you go deep enough to set your foundation, then you start adding on to what you know. So it's like a person buying real estate. Once you buy a duplex, you say, you know what? Now I can buy a fourplex. And once you buy a fourplex, you say, you know what? I might could buy something a little bigger. You know what? I might could buy me an apartment. You know what? I might could buy me a... Nah, don't be a fool like me and make your first piece of real estate a goddamn building like this. Then you done went wide and you ain't got no depth. And now you just been running like... All right, man, let's go a little further, man. So I hope y'all learned something tonight, man. Let's go a little further, man. Just keep it simple, man. All right. Gold has been on fire. So gold prices rose to a new record, and I've been saying it for the longest, and I keep missing this trade. I cannot get in this trade, bro. I keep missing the trade. You know why? Because it's only be down for one day. It be down for one day, then the next day is up $6. And I just keep missing it. So gold prices rose to a new record, putting the precious metal on pace for its largest annual return in 45 years. Gold futures surged to around $37.50. God darn, bro. While bullion for the immediate delivery traded above $3,700 per ounce. The precious metal is up more than 40% year to date, marking its best year since 1979. I can't believe I ain't traded gold not once this year, bro. That is, flush me, man. I can't believe I have not traded gold once this year, bro. I can't believe it, bro. And I keep telling you, Sean, we was early. I was like, Sean, we got to get this. You traded it?
Futures, you can trade gold futures.
Mm-hmm.
One of my students was like, yo, you should trade gold futures. I'm like, nah, I'm just taking the NQ. She was like, nah, trade gold futures. Man, I look at it, I'm like, this is beautiful. This is beautiful. It don't.
I'm telling you, it give you 1 day. Yeah. You got 1 day.
One chance.
You miss it, it's gone. It's gone for the next 2 weeks. Now you're just looking at it, mad every day. Every day you beating up.
Yep. Man.
For show plays. Gold Monster's run this year has been partly driven by expectations of a Fed easing cycle, which started last week when policymakers cut interest rates by 25 basis points and signaled 2 more reductions in 2025. I tell you what, though, the next time it bounced down, I'm locking in. Because I know it's going to run the rest of the year, especially now. Yeah. Especially now. Damn, I missed that gold. Man, flush me again, man. I hate when I miss easy money up. When it's a layup, like, I don't like to miss easy money. Like, this been a layup all year. Like, gold, pop.